This is the video lecture on tax formula. In an earlier video lecture, the Introduction to Tax, we talked a little bit about how taxes are calculated, but in this particular video we're going to look at the tax formula in a little bit more detail. And it's this more detailed version that we would actually be using later on in our next video problem demonstration when we actually determine the taxes. So in this expanded tax formula, which is the one that we will use in a future problem, we would actually start off with income, but it's a very particular type of income. It would literally be our total income, which would be income from whatever source derived. And of course there are many different potential sources of income, some of them obvious and some that are not so obvious, but all of these would be included in this initial figure. Then we would deduct the exclusions. And like I've said before, these are specific items that have been identified by the IRS as being excluded from income. And in a future lecture we're going to talk specifically about what all those exclusions are. Then when we deduct that, we get a number called gross income. So this is a reduced version of income that would be calculated by deducting those exclusions. Then we're going to have some deductions. And these deductions are called 4 AGI deductions. And the 4 AGI deductions, those are very, very specific deductions that have been labeled by the IRS. We're going to have a whole video lecture later on about what those are. And those are deducted to get us down to the AGI itself, which is adjusted gross income. But then notice that we have even more deductions. And these are the deductions from AGI. And I know that that seems a little bit confusing to have deductions that are for AGI and then deductions that are from, because it sounds very similar. It almost sounds like the same thing, but it's not the same thing. In fact, we will have an entire video lecture just on the deductions from AGI. And of course those reduce the AGI down to the taxable income. And it's that number that we will actually multiply by the tax rates. Then we will deduct the credits, and then once we deduct those credits, that gets us down to the tax liability itself. So that is just the criteria that we would use, the formula that we would use to actually calculate that tax liability. And by using that formula, it keeps us organized and it enables us to classify the various deductions that we might be able to take advantage of. But then I also want to talk about these deductions from AGI in a little bit more detail, because what goes into this area are some options. And what we would take here would be the greater of either the standard deduction or the itemized deductions. And we said, of course, in our filing status video, the amount of standard deduction depends upon your filing status. And then we'll have a video later on about all the different itemized deductions. But the idea is that you are not going to itemize unless you can come up with enough deductions that it would exceed the standard deduction. So you're going to take one or the other. Then you're going to take the personal exemption amount for yourself. And then you're also going to potentially take more personal exemptions for all of your dependents. And of course, that's why we said earlier, the more dependents that you have, the better, because you want to be able to deduct as much as possible. But we can only take those dependency exemptions for people who qualify. And of course, that's why we had the video lecture on that. So this just shows you in a little bit greater detail what those deductions from AGI are.